Hello, Oracles. Well, it was a bit of an ugly end to the week for Tesla and the markets, but as we had discussed yesterday, this is the worst month of the year, and this was the worst week of the worst month of the year. So there were some other reasons why we ended up seeing a further sell-off today. So today we're going to discuss why we sold off a little bit more today. Is there further sell-off ahead of us? When are we going to rebound? So we will get into all of that in just a minute. All right, so looking at the charts today, again, down over 4%, ironically almost at 4.20% on the day, closing at 244.88. We were hoping to hold that $250 level. That did not happen. Intraday, we were dancing right around that, and we rebounded a little bit heading into close, and then we continued to crash afterwards. So where are we going from here? We've got an RSI at 43. Again, we've seen this happen previously, and then we've seen us rebound and come back up to push up to overbought. So is this going to happen again? We'll get into that in a minute. Today, we did see volume coming in at 127 million shares trading hands. It's about average for where we have been at for the last month. And so again, yesterday we broke this upward trend that we were on, and we continued falling down further after that. But one thing Gort had pointed out to me is when you look at the longer term trend on this, we did come down, but we did not break through this longer term upward trend. So while my charts do show that we broke that trend, according to these charts, we have not. We may come down a little bit further. So we're going to get further into where I think we're going to bounce after this, but this is giving us an indication that we have not fully broken a downward trend and may be able to bounce and come back up. So my thoughts on this are this. Today we had options expiring, we have funds that were rebalancing, we've got a lot of selling off that was going on today. Again, that's one of the reasons why this is the worst week of the entire year when it comes to the markets. So when all of that is transpiring, we can then look at these charts and say, all right, is this it? Is the pain going to continue? So looking at where we are on the charts right now, knowing what we have typically seen at the end of a quarter, my feeling is we are going to be seeing a little bit more red on Monday and Tuesday. Wednesday may be flat and we might start to see some signs of life again. And then I think Thursday and Friday, we are going to be seeing green to finish the month off. That there, I think, is going to be the finalizing of the rebalancing. Then we can go into October with a fresh life. Now, the interesting part is the fact that, yes, we may close slightly green, but we also have Tesla's production and delivery numbers coming out on Monday, October 2nd. So with those numbers coming out, coming into the end of the week, for Tesla specifically, maybe still a little uncertain. The market has already priced in the fact that Q3 production is most likely going to be below Q2 production. We'll get into those numbers next weekend. But now looking at how the market may be reacting to this, we might not see that sell-off. We might see a little bit of uncertainty going into Friday just because of that. But Monday is the day that we are going to be getting those numbers, and the market is open on Monday the 2nd. So that number usually comes out in the morning. The last bunch that we have gotten have come out on the weekend. So we may not end up seeing that uncertainty going into the weekend, seeing as that Monday morning we are going to be getting the numbers. Now, in the past, we have been seeing the numbers coming out sometime around 11 a.m. So that means that the market will be open. So going into the end of next week, we may not see that uncertainty because the market will be able to be open and anticipate it as those numbers come out. And for anyone who's been paying attention to the market for at least a few years, you understand that this is how this market works at the end of a quarter. You get the rebalancing, you get some selling off, especially in the September timeframe, because it could potentially be an election year, which happens every other year. So this is just kind of a normal occurrence. So this isn't giving me any reason to panic, nothing like that whatsoever. And again, according to Gort's charts, we are looking at a potential maybe Monday and Tuesday being red. And then I think we're going to end up coming up green Wednesday, Thursday, staying in that upward channel. So coming down from here, where could we end up coming down to? Well, going back to the charts here, I don't know if we're going to end up filling this gap at 217.58. And looking at Gort's chart here, this here was when we came down and we hit that 214 gap. So this here is a little bit above that, but we may come down. Maybe we come down and we hit this intraday and close that gap at 217 and then close above it. So it may be possible. So maybe we do come down, fill that 217 gap next week, and then we recover and come up from here. So these are just some of the scenarios that I'm kind of playing out in my head. Again, looking long term, none of this even matters. This is just for anybody who is interested in what the near term movements are going on, anybody who is maybe concerned. Maybe I remember when I was emotionally driven by the stock market, I was like, ooh, what's happening? Why is this happening? Trying to learn. When you don't know what's going on, you end up getting into a position of, emotions get involved. What I have learned from being in the market is the less you know and understand, the more your emotions are going to be involved, strictly because you don't understand why things are happening. It's frustrating. This is why we have uncertainty in the market, which causes the market to get manipulated very easily. The uncertainty is the emotional manipulation. Hedge funds, the market manipulators, they know this. They are not emotionally driven. They are driving other people's emotions. Typically, the people who are emotionally driven in the market are retail investors because we don't have the experience that they do. We don't have enough money in the market to be able to manipulate it one way or the other. When it comes to retail investors, a lot of times we have money in the market because we're looking at investing to be able to retire on this. So if we see that pulling back, we get concerned. What you need to do is just take a step back and understand this. Look back at history. When you look back at history, this happens all the time. People who have been in the market for a long time and just set it and forget it, dollar cost average, this is never a problem. So you have to remember that. So if you are going to be in this, and ask yourself that question, if you are truly a long-term investor, why are your emotions involved? Don't. Just understand the market. It's one of the reasons why I took my time to learn near-term movements on the market, was so that I can understand what's going on so that I don't have my emotions involved. My emotions were involved a lot before. I lost a lot of money when I first started investing. So my advice to you, and this is financial advice, is learn how the market works if you are an emotional investor. This will help you remove your emotions. One of the other things that I did as well was made sure I always had enough cash on hand to be able to take advantage of situations like this. When I have plenty of cash on hand or have cash flow generation, which I have been creating significantly with all of my dividends and my CDs, I now have the opportunity to take advantage of these situations. So when the market comes down like this, I'm not upset. I'm actually excited because fortunes are born during bear markets. We're not in a bear market at the moment, but when we get dips like this, these are the times when long-term investors and institutions like to buy, because this is the time where we get those nice dips. Nobody truly knows where the bottom is going to be, but when you get a nice sell-off like this, you've got some cash on the side or cash flow coming in, you could take advantage of these opportunities. So that is just my advice to you guys and how I have gotten myself through being an emotional investor. And now when I see things like this, doesn't faze me whatsoever. I am ready to take advantage of these opportunities, or if I'm not going to take advantage of them, I at least understand why they are happening, and I know that we will get through this and we're going to go back up again as well. And so now looking at the long-term vision of Tesla and why these near-term movements really don't matter or could present a great buying opportunity, Sawyer Merritt posts out, news. Tesla is one step closer to the start of construction at Giga Mexico after Nuevo Leon's Ministry of Environment approved the company's environmental impact permits. So again, we have been waiting on this. We know that these things are in the works. We know that Mexico wants to get this going as quickly as possible as well. Here we are taking the next step closer to breaking ground for Giga Mexico. Next up in the positive news, Sawyer Merritt posts out, breaking. Jaguar has signed an agreement with Tesla to provide drivers of its next-gen EVs with access to Tesla's supercharger network in the US, Canada, and Mexico. All new Jaguars sold in the region from 2025 will have full integration of NACS. So again, NACS is the North American Charging Standard. This is what many of the legacy automotive makers are switching over to here in North America. So this is fantastic news. There's very few automakers out there right now that have not signed on to this. So it seems like it's just a matter of time before everyone is on board with it. More great long-term news for Tesla. Woo-Wah posts out, Tesla has decided to make and sell battery storage systems in India and has submitted a proposal to Indian officials seeking to get incentives to build the plant, according to people familiar with the matter. So Tesla, we know, is looking to come over to India, put up a factory. Elon has already spoken about this. They're really looking to grow over there. India is an up-and-coming country, great economy that's going to be growing over there. Estimates show it becoming the second largest economy in the world by 2030. This is going to be another huge step for them as well. So I have no doubt that Tesla is going to have a battery factory. They're going to have an EV factory over there as well. These things are going to be in the works very quickly. And lastly, Sawyer Merritt posts out news. The UAW president has just announced that they are calling on 38 additional plants across 20 states to join the strike. Those people will go on strike at 12 p.m. Eastern Time today. So now we did hear from the UAW as well that Ford is making great progress in their negotiations, so Ford may end up being the one to skirt out of this. Don't forget, Ford is the only manufacturer here in the US, other than Tesla, that has not filed for bankruptcy. So if Ford can get through this, I think that really secures their position as the legacy automotive maker that might actually get through this without going bankrupt again. We shall see how this plays out, but seems like UAW is really putting the clamp down on the legacy auto, the big three. Ford could get through this, but GM and Stellantis are in big trouble. Joe Biden will be going out to Michigan on Tuesday to support the UAW. So the way I'm looking at this is, sure, Joe Biden and their whole entire administration refused forever to even mention Tesla's name, even calling out GM being the leader of all of this EV revolution. Yet Joe Biden going out to support the UAW to really put down GM kind of almost supports Tesla in a manner. You know, we don't want to see all these legacy automotive makers die off. They are in turn helping the EV revolution happen. However, by Joe Biden going out there and pushing for the UAW, it's really going to hurt Stellantis and GM. Ford, maybe if they can get through this, maybe not as much, but that's going to help Tesla even more. Kind of crazy when you think about it that way, but this is what's going on with the UAW. That could also be putting some pressure on the entire market. Now, the other thing too on the backhand of this is we need to have the jobs market softening a bit. Well, with all these UAW workers striking, Ford already laying people off, that in turn is going to help unemployment go up, which is what the market is looking for anyway. So perhaps this is just kind of a really weird way of making everything happen the way the market needs it to happen. Unfortunately, those of us down below who are the workers are the ones who are going to suffer for it. So overall, yes, it was an ugly week. Again, historically, that's what happens this week. We get through it. You guys can let us know in the comments if you took advantage of these opportunities today. Market-wide, we had a lot of them. I bought some myself. Every day over on X, I do share all of my scheduled buys for the day. So you guys can take a look at it there. None of it's financial advice. It's just what I'm doing for my own portfolio. But we'll see how we go into next week. You guys can also let us know what you think is going to happen next week. Do you think we're going to be rebounding by the end of the week and start October strong? Let us know your thoughts. Otherwise, thank you so much for watching. I appreciate all of your support. Have a great one.